Good morning, everyone. Darius Dale here to present our macro minute for Wednesday, January 19th, 2022. Starting with markets, we have stocks up this morning, commodities up, crypto down, dollar down, global bond yields up. Big movers, we have copper, silver, and WTI up greater than 1% apiece. Bitcoin and Ethereum down in the 1 to 2% range. On the economic front, while the latest batch of leading survey data suggests Omicron is weighing on global output, the latest case count data suggests the impact may be short lived across large pockets of the global economy that have traversed past the peak in COVID 19 infection rates. So, looking at the US data, the latest, we had the Empire Manufacturing Survey out yesterday that slowed to zero point 0.7 in January. That's the lowest print we've seen since May of 2020. The NAHB Housing Market Index ticked down to 83. That's the lowest print we've seen in a couple of months or 3 months. These are January data points. Throughout. Australia's Westpac Melbourne Institute Consumer Confidence Index ticked down to 102.2 in January. That's the lowest print we've seen since September 2020. Germany's Zoo's current situation index ticked down to minus 10.2 in January. That's the lowest print we've seen since May of 21. But then we got the expectations index on the Zoo side. Again, these are data points from the last couple of days. Germany's Zoo expectation index ticked up to 51.7 in January. That's the highest we've seen since July. And then the Eurozone expectations index, the Zoo expectations index, ticked up to 39.4 in January. That's the highest point we've seen it since July as well. So the skies are getting clear. It's getting a little bit blue. I know it's winter. I know it's snow everywhere. But the blue skies are kind of coming. We'll see. But just kind of taking it to the chart, I mentioned that we're starting to see large pockets of the global economy roll past the peak in inflection rates. If you look at the UK curve is obviously kind of sort of traversed a parabola. The US curve looks like it wants to do the same. The European Union curve is doing the same as well, as is the Canadian curve. You still have some pockets of the global economy that are still accelerating, but in terms of some of these major countries where it really matters from a global GDP perspective, China notwithstanding, we're actually starting to see some positive developments as it relates to COVID-19 infection rates. So we'll see how this data unfolds. Obviously, the February data aren't going to be reported to March, so not going to really get any too much confidence on that in the near term. But obviously, markets are forward looking, and we do suspect the current reflation regime is actually looking in and sort of looking through the current weakness and into what we're talking about today. So getting back to the probable range setup, so overbought signal in the VIX, silver, currency volatility, two-year Treasury yield, 10-year TIPS yield, oversold signal in the S&P still. S&P 500 still at the lower boundary of its probable range with 6.3% upside. That's bullish VAMs still. WTI still bullish VAMs with 10% of downside versus only 30 basis points of upside to the upper boundary of its probable range. Bloomberg Dollar Index still neutral VAMs minus 0.6% of downside versus 1.2% of upside. 10-year Treasury yield, bullish VAMs still minus 23 basis points of downside versus only 2 basis points of upside. Bitcoin still bearish VAMs minus 12% of downside versus 6% of upside. Ethereum bearish VAMs still minus 15% of downside versus 11% of upside. And then lastly, gold neutral VAMs minus 2.2% of downside versus 1.7% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, January 19th, 2022. Best of luck out there today.